following is a technical analysis on IEUR, the largest component to the European markets based upon the daily interval, in which I believe Europe could be primed for a sharp drop as it faces stagflation, collapsing industrial output, and an ECB central bank trapped in between inflation and a recession. The backbone to Europe's economy is Germany, and their economy is cracking, with energy insecurity remaining a threat and geopolitical risks now spiraling. Now, with European leaders recklessly floating the idea of boots on the ground in Ukraine, the stakes have never been higher. As Russia holds the upper hand militarily with high-tech weaponry and economically, any escalation could trigger market panic, sending energy prices soaring as we saw the last 2 days on nearly double-digit gains on back-to-back days with the spot price of natural gas. This could crush investors and long-term individual and leveraged traders in an already fragile region. And if and when this path continues, I believe IEUR could be staring down a rapid and unforgiving sell-off as we knock into major price resistance level based upon a major reactionary primary uptrend line off the October major reactionary lows off of the 2022 fastest global rate hike in history there, led by Jerome Powell, only to put in a nice clean divergent low. You had positive and or bullish divergences, which was the technical catalyst for this huge rally on a 40% move to the upside, backtesting ultimately in November of 2023. You had 1, 2, and an additional third major reactionary low off the August 2024, preceded with a great major huge rally to the upside, in which we gapped down, and you are now banging on the door. At the bottom of this primary reactionary uptrend price resistance level, you had a backtest breakdown sell signal with an additional backtest was only rejected there for an additional 8.3% crash. Big move to the downside. Make no mistake about it. That sell signal largely remains intact when you continue and consider the divergences. Divergent high from that previous drop is still intact. And as these negative and bearish divergences only continue to grow on a much larger scale, you have huge volume spikes in between this key inflection point, ultimately signaling that this price key mechanism is a psychological level. And here we are rejecting on an overshoot price false breakout as bulls and long traders sold off into the close, with some of the European leaders speculating whether to have it contain and structure its own front line for Ukraine there. And we are on a vast rejection amongst that backfill of the gap. And make no mistake about it, we are closing right in on it. It set some stops previously up above that major reactionary high, where the great risk-reward ratio lies heavily to the short side for any bear traders and or short sellers, honing in onto the first target of 60.63 for a 1.7% drop. And if we take that level out, which is a minor reactionary uptrend price support level in correlation of its 50-day moving average, we take that level out, you're going to put in an additional minor sell signal within the daily realm, only increasing the odds for an additional move down to the 59.26 handle, ultimately undercutting its 50-day moving average for 3.1% drop, ultimately down on a major price retest of the 200s in the 200-day moving average, call it 58.21 price support for a 5% crash. Europe is ultimately playing with fire, and the consequences could be catastrophic. A direct military confrontation with Russia just isn't reckless, it's unwinnable. Moscow holds the strategic advantage, and any escalation would shatter markets, destabilize economies, take out these wedges, and risk a conflict Europe is woefully unprepared for. If and when leaders push forward, the fallout won't just be political, it'll be financial devastation.